Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey everyone, checking back in on the MJ space, the Canadian MJ space to be specific. We'll address the thumbnail in just a second. What do Tesla and CGC have in common? As you guessed, it's probably to do with psychology in large part. It's very important to note that the last 2 days, we pointed out in the video yesterday, and today was as convincing a follow through as we could get, that USMJ is going up, and it does look like there's a capital outflow of Canadian MJ into USMJ. USMJ has a slew of earnings coming the next 2 weeks. Pretty much every day, we have one of the major names that we follow with earnings. And to be honest, it's probably going to look pretty good compared to Canadian MJ. It's hard to imagine that they will look worse. They still have their own issues as far as access to capital with the laws down here and all that. But I mean, again, just today, right off the top of my screen here, 8%, 12%, 4.5%, 7%. And of course, Canadian MJ just bloodshed red day yet again. So there is that shift going on. Today is day number 2 that it has stood out to us, and we'll see how long that keeps up, but pretty much going to be dictated by the earnings reactions the next couple of weeks. So what do Tesla and CGC have in common? First, we'll give a little bit of background on Tesla. Obviously, hopefully you know what the company is and what it does, and they've got Elon Musk. I've been following Tesla pretty much every day for the last 4 to 5 years, pretty much since the Start Guys started trading and started being a thing, I should say. It was one of the top names that we followed because of the volatility and because of the hype and the emotions around it. It has the biggest cult following that I've ever seen on a big board stock. You see cult followings all the time on penny stocks, and it's a very small group, but this is huge. It's a constant battle between bulls and bears, and it's essentially tons of bears based on fundamentals and their earnings, and tons of bulls based on the story of the stock, their like of Elon Musk, and they're wanting to overthrow the oil industry and turn the auto industry upside down over the next decade. That's essentially what it boils down to. Fundamental bears say, look at these numbers, they don't make sense, this valuation is absurd. Fundamental bulls say, I don't care, I'm looking 5 to 10 years out, and Elon Musk is a genius and he's gonna pull it off. That's what it boils down to. And if you go on Twitter and just watch this battle, it is just constant bull and bear back and forth. And even Musk understands how markets work. This is why I like Musk. He intentionally tries to squeeze shorts. He's gotten in trouble with the SEC multiple times by putting out tweets alluding to potential inside information and trying to trap shorts when he does it. But all in all, it's just a ton of drama around one stock, and it's very emotional. There's a ton of retail traders in this stock because they like the story and they are playing this name. Tons of emotions, tons of retail traders. So obviously we know CGC, tons of emotion, tons of retail traders, tons of speculation as to what the future is going to hold. That's what Tesla's whole deal is. Numbers do not value or do not justify the valuations with where they stand. It's looking forward with where bulls are justifying where the prices stand. So someone made a point, and shout out to Jimmy in our chat room, and his point was, I haven't seen anything like this, and I should have brought it up word for word so I don't misquote him. I'm going to do that right now. So the post he made is highlighted here. I remember recently all the bearish news and when Tesla was downgraded by so many analysts in May. The bottom was June for Tesla. Now it's getting all the price target upgrades at 350. Not saying the bottom is next month, but the same thing is happening here. So he's referring to the similarities between everybody going bearish to Tesla and how that pretty much marked the bottom. So if we look at Tesla's chart, and I read his post and I said, oh yeah, that does definitely ring a bell as far as being similar. That's the best example we have of everybody being bearish. What happened with Tesla is for 2 years we were range bound, where we had all-time high, pullback, double top at all-time high, pullback, didn't quite get there, big drop, all-time high, triple top, double bottom, quadruple top, and then we rolled over. And this is where the bears took over, and this is where the sentiment was the most bearish that I have ever seen on Tesla in my life. and where everybody on social media was bearish. The company is not going to be able to raise funds. They're not going to be able to cover their debts. They're not going to be able to stay in business. And the downgrades were coming in. Every single analyst was downgrading it. And that was the bottom. And what was the bottom marked by? There was no news event down here that saw this huge bounce from 177 to 266. We pulled back 50%. We had an all-out dump, and it was the scales tilting that caused this bounce. Exactly what I talk about when I say there was nobody left to go bearish. There was nobody long that was left to sell, and that's when the bounce got going. Now, since then, we've seen bullish reactions to earnings. We've seen bullish news and upgrades and all that. So this is definitely relative to recent financials and fundamentals, but this move off the bottom was not. It was just that V-shaped bounce, waterfall drop, and recovery. So, okay, that's great. You know, they're similar. Why else does it matter? Well, then I pulled up this chart and I said, good Lord, that is the CGC chart right now. This is the area that I'm talking about right here on Tesla. High, pullback, inability to break resistance, sure got close. And then we rolled over with months and months of pure bear action with very little bounce. Let's see what it looks like on the monthly time frame. There it is, just a 3-month absolute waterfall and really a 6-month pullback. You pull up the CGC chart. Let's get this weekly chart fresh in our minds again for Tesla. What does this look like? CGC, high, pullback, inability to break the all-time high, and then a significant pullback. So I am saying that the comparison is not only all the psychological aspect and the analysts and all that, but this chart on the weekly time frame for CGC certainly to me looks very similar to this chart on Tesla's weekly time frame. So what I'm looking for, the differences, let's talk about the differences first. Where is it not the same? This 4-month drop was free fall waterfall that led to the V-shaped recovery. CGC is only on week number 1 of its new waterfall phase. We've had waterfalls in the past. We traded sideways for a month. Now it's our new leg down. Everybody's going bearish. All the analysts are downgrading it. We will reach a point in the sector where these scales tilt because there is nobody left to short. Any bull that is going to exit their position has already done so, and it's only buyers left. That will happen eventually. Am I saying it's going to happen now? No. But I'm saying that is the mindset that I am now watching for, and my mindset is shifting in this sector. There have been people who have been watching my videos over the last 2 months who have been unhappy with how bearish I have been. And they said, what about the contrarian mindset? Why are you looking the same direction as everybody? And it's because the charts have dictated to do so. With this most recent flush down and the headlines and the attention that it is grabbing, now I'm ready to start looking a bit contrarian and a bit counter to what the herd is doing, because we get to this point where everybody is looking in that direction and you get this maximum capitulation. That's what the definition of capitulation essentially is. So I'm going to go through and do the regular analysis here of the Canadian MJ names. By no means am I saying it's time to start buying CGC. I personally have entered one position, as I talked about in the video yesterday, and I plan on trying to establish longer term positions by putting myself in low risk scenarios, protecting my trades, but having a mindset that I expect that we will see a significant shift that the market is not going to be expecting sometime in the next 2 months. Again, keeping in mind that the potential of tax loss selling in the end of the year may keep us weak a bit longer than I otherwise might expect. So again, we pull up the monthly time frame. It's just a significant pullback, and we are getting to the point where I believe we will see that shift take place. Do I think the bottom is in right now? No, I don't. Today's action makes me believe that we could easily see another leg down. And even then, if we see a leg down and then bounce on the daily time frame for CGC, we will just be looking for that lower high, and we could always drop down to a lower low. Can CGC drop to $12 in the next month? Absolutely. And my answer will always be absolutely. We can drop to another lower low unless the stock price is down at $1. So the last thing I'm doing is buying and holding and sticking to my thesis and being stubborn. What I am going to be doing is trying to maneuver to establish a position where if we do get a bounce, I will exit partial profit. I will put a stop at break even for as much wiggle room as I can give it, and then hope that we change trends rather than drop down to lower lows. And if we drop down to lower lows, I'll just be stopped out and I'll do it all over again, because I believe that there will be significant opportunity. Like I said in Bitcoin, I was saying the same thing in my Bitcoin videos at our base, saying when our bottom is hit, we will go 100% easily. We went 400% fairly easily, and I did not capitalize on this as much as I should have. I have made nice crypto gains in 2019. I could have made way more, and I'm going to up my aggressiveness a little bit in the MJ sector for that same kind of bottom and turnaround that I will be expecting. That being said, let's be completely honest, I have been expecting a shift in the Canadian MJ space, the MJ space as a whole, for months at this point, and I have been wrong. I've been too early. But again, that's not me buying and being wrong and holding bags. That's me attempting to establish positions, being wrong, exiting break even, exiting small profit, exiting small losses, and then looking to do it all over again. Have I missed opportunity to the downside? Absolutely. But I'm looking towards the upside when the shift does take place. So that's where I stand. And I suggest everybody have their own game plan. There's no need to try and catch a falling knife like I am doing in CGC. I am being aggressive. I have been conservative in the MJ space month after month after month. And I'm shifting that up a little bit by my own decisions, obviously. So you can wait for a daily trend change. You can wait for a weekly trend change. There is no need to do it in the style that I am. I just like oversold bounces, and I have done well with them, so I'm going to continue playing them. So looking at CGC, today's action, we saw a double bottom first thing at the low of the day, and then a very nice 4% bounce from that double bottom to the high of the day. But we knew if we could not break 1605, the bulls prove absolutely nothing, and we see no pressure put on shorts whatsoever. So we rejected from 1586, and if we look at the 5-minute time frame, it was a double top at the high of the day. We started the day with a bull move and dip buying all around MJ, and ACB had huge dip buying from its flush first thing. We'd started the day down 17%, and then we bounced significantly back to only down maybe 5%, and then we gave it all back again. But it was this 5-minute higher low and higher high that was so important this morning, and we saw ACB with really nice 5-minute follow through, because the higher low and higher high continues to put some pressure on bears. But when ACB did it and we didn't see CGC follow, we double topped and then pulled back hard, and we didn't see APHA follow, it could not see the 5-minute higher low and higher high with follow through. That made us cautious. When we are going to see a meaningful multiple day bounce in this sector, everybody will do it in unison. And if we do not see that happening, and if it's only one individual name bouncing, we need to remain skeptical. Yes, individual names can do their own thing, especially if there's a fundamental reason behind it. But if we're going to look for what I'm looking for as far as the shift in sector sentiment, everybody has to bounce in unison as a sector. So as soon as you see one name getting the follow through and other major names not, that should spark a red flag for the bulls. So we ended up trading sideways, double bottom at 1550, lower high, triple bottom, quadruple bottom, quintuple bottom, lower high, bear break, and we just faded. We're still very weak. Again, at this point, the way that I established larger positions is I will never buy these 4 positions all at once on CGC that I'm looking for. So I would welcome weakness at this point, to be completely honest. If we break $15 and see a flush down to the mid $14 range early next week, I will add a second position. If we break 14 psychological, I will add a third position. If we break 13 psychological, I will add a 4th position. I do not think we're going to get that extreme. There will obviously be little shifts that I make on my game plan. If we waterfall, I'll be more aggressive scaling in. If we stair step down, I will be less aggressive scaling in. But I do not believe we are at the bottom just yet. We could easily see another leg down, and the fact that ACB broke the low of the day, gave back all of its bounce at the end of the day, and closed weak is catching my attention that we may see a little bit more weakness starting early next week. I'm also going to be watching Cron for the potential as well, and I may shift a game plan where instead of going as heavy in just CGC, I might diversify a little bit, because Cron's getting down to the extreme oversold levels that I like to see on bounces as well. So for CGC, just to wrap it up, 1605, 1586 are our key resistances. 1519 is our double bottom. If 1519 breaks, we're going to be looking down at 15 psychological. And then at that point, previous resistance levels won't mean a whole lot to me. I'll keep note of them, but it's going to be more based on what the sector is doing, what the volume looks like. 1260 is a level that stands out. One of our Fibonacci traders in the chat room pointed out in their Tesla comparison that the pullback they had charted on Tesla bounced off of, I forget which fib level he pointed it out, but he said that that same fib level on CGC would be in the mid $13 range. So again, just another comparison to be keeping an eye on with those two. So daily inside bar, but a weak close. Could very easily see another leg down first thing next week. So Cron is in free fall as well. The weekly time frame, RSI back to oversold. We traded sideways for a month. Clear drop down. 650 has broken. And now we're looking at this base of support in the $5 range. Look at all this price action. So a ton of price action down around 561, 512, 550, 609. So if we break 6 psychological, I'm going to start getting interested in Cron as well. The daily time frame RSI is in the mid 20s. 4-hour RSI is in the teens. So if we start weak on Monday and break 615 and $6 first thing, that RSI is going to start being in the low teens on the 4-hour time frame. Again, you look back historically, we bounced from 18, we bounced from 16, we bounced from 22. So we're getting near historical low levels on the 4-hour RSI, which definitely captures my attention as well. And the hourly time frame did cool things off a little bit at the end of the day, and we're watching the hourly exponential 12-period resistance, which we would have to get over for a bounce. And we're watching volume climaxes. Not a volume climax today, it's high volume, but there was not nearly enough bull volume mixed in there to call that a volume climax candle. If we're going to see a volume climax, we're going to see a flush down to $6 and then a bull move and a green close on Monday. That would be a volume climax if that were to take place. So I am interested in Cron and CGC for scaling into some positions. Again, just as another example, I gave one yesterday, but if I'm going to scale into Cron, my style of trading is make an initial entry on a break of $16, save a second entry for the mid $5 range if things got real extreme. Let's say I enter at $5.99 and $5.91. Nope, $5.99 and $5.49. That's going to give me an average of $5.84. And if we start to bounce and we make it up to $6.10, let's say I take half of my profit, that's 26 cents profit, and my average is $5.84, and I can then put my break-even stop at $5.58. That's what I would look to do. And if we drop back down and I get stopped out, break even, no big deal. Start with a fresh, clean slate. Continue to take it one day at a time. But I am looking to establish a position on this oversold bounce, and I will look to maneuver around this oversold bounce to try and hold for a bit longer term. Hourly resistance on Cron, pretty much anything under 679 is just an hourly lower high. APHA, another solid bounce day today, but bulls are struggling. We're pretty much not pulling back as much as other names, but obviously not seeing a whole lot of strength. So here's this 5-minute time frame this morning. Big bull move with everybody, higher low, no high of the day. And then we dropped down and low and just faded. So the fact that we did not see all major names doing the same thing was a bit of a red flag. So what we have now is low of the dump, high of the bounce is 445, double top at 444, and we are looking back down at support of 408. So we have one support, 422, then 408, and the bulls would have to break 445 to get the daily bounce underway. If we break 445, we zoom out and we look for a daily lower high compared to 510. ACB, I mean, the opportunity in both directions was awesome today. Huge bounce. I mean, these bulls and the short covering was just massive. 16, 17% off the low, and then we faded and gave it all back. As long as bears continue to have opportunity to make 10 to 15% in one day, there will be bears to enter on every single bull move that we see in this sector. What's it going to take to change that success that the bears have been having? Trend changes. Because if you see this move, and if you consolidate and form a higher low, and you have bulls saying, man, I missed that move, I want to get in on consolidation, and we set an hourly higher low and break the high of the day, that means anybody that went bearish on that initial consolidation is then in the red. And they're covering, let's say we pull back and then we see that continuation move and a trend change. That means anybody that bought in this range or anybody that shorted in this range is underwater. And their short covering is what adds fuel and continuation. The bulls buy the dip because they missed the initial bull move, and then The bulls buy the break of resistance and the shorts cover on the break of resistance. If we do not see those trend changes, and you've heard me the past 2 months say this on the daily time frame, if you do not change the daily trends, if you do not change the hourly trends, you put no pressure on shorts, and they will continue to pile in on every single bull move that they can because it keeps working. It takes being punched in the mouth by the bulls and an hourly uptrend that lasts 3 days out of nowhere with higher lows and higher highs to really start to scar some of these bears and say, well, it worked great for weeks and months. It's not working now, and I just took a loss entering a short position that otherwise in the recent past has been very profitable. When that happens, that's when the momentum shifts. And obviously today, that did not happen. We gave it all back. Cron did the same thing on its earnings reaction. There was a great bounce there. 760 up to 850. Let's look at this and just compare, because it was a massive bounce and the exact same thing happened. It's just shorts reloading. We bounced 12%, and then by the end of the day, we pulled back from the high, and anybody that went short on that move made 6-7+%. And then we just faded and dropped to lower lows. So bears continue to be rewarded, and as long as they are rewarded and not punched in the mouth, they will continue to short every bull spike. And you better believe that the bounce that I'm looking for to take place on Cron and CGC and the sector, there's going to be bears looking to short the daily lower highs. ACB. So, bigger picture ACB. Week close, we filled the gap. The gap fill was a target for the bears. 311 filled the gap. We got up to 317 and then pulled it all the way back. So support is going to be 270. And the next level, looking at the weekly time frame, we're looking down at 220 and 211 as the next few levels on the weekly chart. Weekly RSI on ACB, just like that, is in the low 20s. Starting to get real extreme. Monthly time frame, pretty much 8 months in a row of straight pullback. Watching for that sentiment shift. TLRY, daily time frame, tried to bounce, holding up better than some of the other names, but still not doing a whole lot. No hourly trend change. Nice bounce first thing in the morning. No hourly higher low and higher high. No pressure put on shorts at this point. If we can see a bull break of 2050, we will then be looking at anything under 2216 as a little daily lower high, keeping in mind that we're coming off of the all-time low, and also keeping in mind that RSI levels are a lot less useful when we are dealing with all-time lows as well. Hexo, still weak, a little bounce, closed near the low. After 176 support on Hexo, we are looking down at 175 is right there, and after 175 is 153. So bears still in complete control. And anything on the daily chart under 240 is just a lower high. I believe that all of these names will bounce when the sector bounces as a whole with all the major names. And you can go back and look at history. So we have historical examples. When's the last time the entire sector was weak and then all bounced in unison? Let's look at October 14th. A massive dump to lower lows on 3 or 4 days. And let's look at what Cron was doing at the same time. So there's October 14th. There's our bull move, 3-day move. APHA, what were we doing October 14th? Big gap up. That was earnings. So earnings helped spark the bounce sector-wide. Point I'm trying to make is sector has to all do it in unison and all see 4 to 6% green days for us to say, okay, our temporary bottom is hit and the daily bounce is underway. And when that happens, all of these names will benefit from that. OGI, week close down at the low, support after 225, zooming out. We're looking all the way back, 212 is the next level, 215, 212. CTST, all bears. I don't even want to cover that. Forget CTST. T-God, forget T-God. I mean, if you're in T-God, I'm sorry, but breaking 91, just a clear flush. Here we are at 70 cents, a very quick 20 whatever % drop. We closed at the lows, tons of issues, and all-time lows. So I don't care about T-God. VFF, bulls bought some of that dip. Hourly time frame. So we have the low of the reaction. We had the high of the bounce, which was up to 640. The low of the day held the low of the reaction, and then we broke the high of the bounce all the way up to 679. So there was definitely some dip buying. Healthy hourly consolidation at the end of the way, all things considered. When you look at what everybody else did as far as ACB and CGC, this is pretty healthy hourly consolidation. We still need follow through. Bulls would have to hold 570 and break 679 to keep this hourly little uptrend going. And if we can do that, we zoom out and we'll definitely be looking for a daily lower high compared to 890. But the bulls can say, well, at least there was some dip buying today on the gap down, and at least we didn't close at the low of the day like ACB did. Labs, gap down for buying today. Have we changed the hourly trend? Not yet. Solid move. Bulls need to hold 380 and break 424 to change the hourly trend, in which instance we would zoom out and look for a daily lower high compared to 547. And VGW, inverse head and shoulders. You could still call that in play. Pretty much I'm just looking at high, low, double top, and the bulls need to form a higher low compared to 260 and try and make their way back up to 350 and 358 double top of resistance. So takeaways, bottom line summary. The sector from this pullback will bounce as a unit if it's going to be the bounce that we're looking for. Keeping in mind that the bounce that we're looking for is absolutely just looking for a daily lower high. And if you want to continue being bearish this sector, short it. Short that daily lower high when we get it. If we see CGC pull back, let's say we bounce off of $14 and we make it back up to 17, and we'll be looking for that daily lower high. Short that daily lower high if you want to. There's going to be a lot of bears that are going to be doing that. But again, my perspective is more aggressive and more longer term. I'm looking towards early 2020, and I'm trying to position myself where I can have a break-even stop on this bounce and try to see follow through. A daily trend change is what I want to see. When's the last time we've seen a clear daily trend change with a clear pivot point on CGC? We just haven't in a very long time. And I've been saying that for so long at this point. Huge move, no clear daily trend change. Higher low, fail to break resistance, bears take over. Daily trend change will be essential. The 12 and 26 period exponential moving average has been bearish ever since the $50 range. It has not crossed bullish. We came close here, but we never got a convincing bull break. That will be a signal to be watching as well. And in my opinion, it would take a very clear daily trend change for that to take place. Bottom line is establish your game plan. If you do have cash and capital, what are the criteria that are going to lead for you to make an entry? What is your game plan? What are your targets? What will your stop level be? The last thing you want to be doing is holding a bag, because it is entirely possible that if this was our low on CGC and we bounced back up to $18 from here, could we drop down to $12 and drop to lower lows? Absolutely. So a lot to think about, a lot to ponder. There's opportunity approaching for bulls sometime in the next few months, and I plan on capitalizing on it, and I plan on keeping my losses very minimal. It's going to require a lot of active management and positioning, but I anticipate that it's going to be a good start to 2020. Comments, leave them. Am I crazy? I don't know. We'll see. Have a good weekend. Check out the USMJ video. Those bulls are starting to perk up. Earnings will be interesting over there.